Ready?
Yeah, I'm ready.
Okay.
It's been a while. I almost forgot what to do.
It has been. It has been a while, but I'm excited to be back. I love connecting and recapping and reviewing where the market stands and giving folks a glimpse into our world and how we're experiencing things and what feedback we're getting.
Yep. Yeah, a lot going on.
Yeah.
As always, I mean.
Yeah.
Yeah, so it's good to be back in our podcast, right?
Yes.
Talking through some of that stuff. So
definitely.
I had a lot of interesting things going on the last couple of weeks with.
I am all ears. I'm so excited to hear.
Some conferences and just sort of kind of busy set of meetings, and we've missed a couple podcasts just because we've been kind of hectic. But
yeah,
I think it was a good time because we kind of got to figure out some things that are happening in the market and just sort of see where the direction is going headed into summer.
Yeah.
Which is usually a slow time for us in general, but
it's true. I feel like it's been this weird, slow but still busy, a lot happening.
Right.
I think in this being a non-traditional summer in the sense that it's not it hasn't been your typical spring market. So some has trickled into summertime. The interest is there, but people are cautious about the moves that they make. So there's a lot more fact finding, a little bit more research than may have gone into executing deals, as opposed to people knowing what they want, just getting it done. There's a little bit more back and forth to see.
Sort of like what a normal market should be, I feel
Yeah.
like, right? Like, that's, I think, what we're experiencing right now. Like, just more of a normal, a little bit more of a normal in terms of, like, supply, I don't know, supply demand, but, I guess supply demand or buy-sell balance, I guess is a better word.
Yeah.
Tenant-landlord balance, maybe.
Yeah. I think so. Because it's not like there's a plethora of inventory to be met with a plethora of interested parties. I think people are identifying what they want. They're trying to figure out in the greater scheme of things where the market is trending, what people's habits and behaviors are going to, what type of returns those are going to yield, and being very specific about what they acquire, what they invest in, so that they can minimize buyer's remorse.
Yeah. Same thing on the tenant side.
Yeah.
I think,
I think so too. Yeah.
I think so. I think all right, so I went to this private funds real estate conference.
Sounds exciting.
It was cool. In Rhode Island last week.
Okay.
And outside of eating a lot of lobster.
Ooh.
I learned a lot.
You're gonna do it, right? That's one of the best places. What's after that? Maybe Boston?
Yeah, right.
Or the South, so to speak.
Maine, maybe? Maine.
Yeah, Maine,
right?
Yeah.
No, seafood was good. Weather was terrible though. I didn't realize Rhode Island is cold.
Oh.
It was cold.
Wow.
Like complete
legit
opposite. Yeah.
Cold.
It was
Like you needed a jacket.
Like I had to buy like a sweatshirt because I just wasn't prepared.
Oh wow.
I thought it was gonna be like here. It's like
I think we've all learned that now too. I don't know that too many people knew that Rhode Island was gonna be giving temperate weathers in summertime.
Yeah. But it was cool though. It was good. I learned a lot, and like I feel like the theme was people are optimistic and feel good about where things are headed.
Sure.
But there's still a lot of like cautious behavior and difficulty sort of doing deals.
Really?
Yeah.
That's so interesting to hear. From private fund sounds like we're not in want of funds. We have those. So if that's the theme, what were their elements of caution that, given that you have the capital, because more often than not, people don't have the capital.
Yeah.
So if you have the capital, what is the hesitation to deploy it?
So my first thought goes to like, okay, you got the capital. How long can you hold that capital for?
Oh, that's
right?
a good question too. Yeah.
And in not all cases do they even have the capital.
Okay, that's fair.
I've sort of learned they've got the ability to like, yeah, exactly. Ability to call on it or pull down commitments, whatever.
Okay.
And then like the other side of that is there's an institutional piece to it. So there's a lot of like, pension funds and retirement management companies, and like those are, won't be rushed to do anything. But the cautiousness I think came mostly around a lot around the debt markets, interest rates, what happens with people who are trying to refinance loans, and does that cause some further sort of collapse? The war situation going on is definitely pushed some people like within the last
48 hours.
Yeah, to a position where they're like, I don't know, let's wait.
We'll see how the markets respond today, because when did that happen? What was that, Saturday night?
Yeah. Right. That's a good point. Let's see what happens today.
Yeah, because it'll be the first business working day since we learned about it, and I feel like
big reaction, probably, right?
Probably. I think because already the past couple of weeks when we were uncertain about what was happening in tariffs, that sentiment was being demonstrated in the markets, and there were fluctuations. So one day it was terrible, the next day it like bounced back, or it leveled off. So yeah, it'll be interesting to see the response today and then over the course of the week as we get more information about what's happening.
Yeah.
Also, too, I think at this point, even though we don't know, people probably feel like we have a huge ocean dividing us, and more of the activity may happen over there. But what if it happens here?
Sure.
I think that's a question that we now have to think about. We've been in transition since, end of January, and like a lot of shocking news to where people are like, ooh, okay, what do I do now? Yeah. We're still in that space.
And for us, like we play in the both on the investment side of our platform and the brokerage side. Most of what we play in is like private, non-institutional capital, right?
Yes.
And for those people, I feel like a lot of that crowd keeps a lot of funds in the equities market. So, depending on what happens, you start seeing dips there, and people start to say, I don't want to pull that capital out to go buy real estate yet, or whatever. So like, I feel like that's a big piece to it too, for a lot of the group we play with.
That's such a great point, because it's almost like close to their close accessibility. Like they want to be able to see what's happening, as opposed to pivoting, taking it out, putting it in something else, and then having uncertainty.
I'm gonna say something opposite now that contradicts it, but maybe also there might be this set of people who just say, I want to pull it now and go put it in hard assets. So I don't know.
That's a great thought, because then there's even more tangibility. Like I can drive by this physical building and see that it's there, and know that even though I don't see my money like I would on a ticker, I see my money because it's manifested in a physical building.
I feel like regardless, there's this one more layer now of uncertainty we're sort of adding on, which I feel like never bodes well for our business.
Yeah.
At least in a short period, like while people sort of figure out what's happening and like where it's all going.
Yeah, and I think that's the piece. It's the figuring it out. People want certainty. It's not like we don't have the ability, unless it's a quick asset purchase and then a sale or an immediate lease. You don't always have in this real estate market a guaranteed return right away, something that you're going to have to sit and let it mature. And I think that timetable is taking a huge toll on how people make their decisions. So, yeah, it'll be interesting to see. I don't know. Do you have a prediction? I'm always going to predict optimistically, but.
So do I have a prediction? I want to be optimistic too. Yeah. I want to be optimistic also.
Because I feel like we were in a good space coming into the year. Like people still have capital, and they're being wise about how they deploy that capital, but the resources are there. There hadn't been anything sort of diminishing the resources. Okay, yes, prices had gone up, but that's somewhat manageable. You can choose and decide what you purchase and what you don't, and how you're going to pivot.
Right.
Now, because we have this additional factor, I think it's going to be a little bit more wait and see, because people are like, okay, well, what does this mean locally? What does this mean nationally?
Well, that's definitely true. I mean, a lot also everybody talked about at the conference was there's like these micro markets where things are happening very differently than what's happening on the bigger scale, which is, I feel like, obvious. Like, we know that you sort of have to look deep into kind of figuring out what's happening in certain pockets. But
did any markets stand out in particular?
On the apartment side, you know, pockets like markets, MSAs like Atlanta, Nashville, you know, that seem, yes, they're struggling right now.
Really?
Because there's so much supply that still has to really get worked through.
Wow.
But then the
demand was there.
It's there. It's just too much. There's just too much right now. Like,
very interesting.
That they're still working through.
Okay.
And then, but the other side of that is there are a lot of people talking about how many markets have hit peak supply. You know, we've passed peak supply period. So, which is a good thing. And that was really across most asset classes. Everybody talked about it. Yeah.
Okay.
Yeah. Like, people felt very strong about retail. People felt very strong about apartments. Industrial, most people felt very strong about as well.
Okay.
Yeah, office nobody really talked about, but there's really nobody there doing all this. But those other asset classes people felt really strong about it, and
that's exciting. I mean, those are the two, the retail and the industrial that I tend to focus on.
And that's what we need, because I feel like right now we've got this uncertainty with the war happening.
Yep.
We've got really high interest rates.
Yep. And
we've got, you know, some peak supply issues. Demand's still there in most markets that we're active in, except I won't, you know, this Philly area very different than a lot of other pockets, but just generally speaking, for national level, like, we've got those things we're dealing with. So I don't think, you probably saw the Fed news, you know, no movement on rates, although there's some optimism that's going to come down, but I feel like, who knows? So if we don't get relief there, we need relief on the supply metrics. Yeah. So that's good news that I think we're seeing absorption come through, and you know, not so much demand, or not so much new supply coming, but demand staying strong. So
I think this way you can focus on what exists and take care of that. And satisfy that. And also too, those two segments, well, even apartment, for the most part, you can enter into a lease situation, so you don't have to rely so heavily on obtaining capital.
Right.
Because if you already own the space, now you leasing it out, there are more people who are in a position to say, okay, I can fork out this lump sum to get this started, and then I can leverage my business and the business coming in to facilitate the rest of my financial obligation. Yeah. So that we can keep things moving. I think sales right now, I haven't come across a lot of sales.
Active buyers.
Yeah, unless it's sellers who are on a balance sheet and the bank is like, goodbye.
Right.
Please figure it out. We don't want you.
well, all right. So this is another interesting thing that sort of was a hot topic. Everybody kept asking, you know, where's the distress? Where's the distress? Right. Yeah. Like, we've heard that. Like, how many clients do you work with that say, where the, you know, I want to see distressed deals, waiting to buy. Nobody's seeing anything. And the stuff that is distressed is like, you know, a couple basis points lower than where it would trade normally. And it's not really so much that the asset's distressed, more the sellers in a situation where they're just trying not to lose all their equity.
Exactly.
Like, it's not that the deal is going to trade under UPB. It's just more about, like, they're trying not to lose all their equity.
Exactly. Because collectively, prices are up.
Yeah.
And people's mindset has gotten acclimated to the fact that life is expensive now. And barring some calamity, it's probably going to continue to be expensive. Like, this is the threshold. Yeah. So in negotiation, you're not looking to then be able to say, oh, I'm going to get a half price on this. It's not realistic. Could there potentially be something slightly lower, like you were saying? Yes. But those are needles in a haystack.
Yeah. I mean, and the problem too is if there's one or two or a few, which there certainly could definitely be.
Sure.
See so much like dry powder, as they call it, or whatever.
Dry powder.
Yeah, like equity
like
sitting on the sideline, like people waiting, salivating for this stuff. It's like, okay, then what's going to happen?
Yeah.
You listed at a discount, and it just gets bid up to like normal pricing.
Yeah, it does. And that, I feel like for sellers, that's the best strategy. Please don't come into the market with what you think it's going to be. Whatever you think, lower it by 10 to 15%.
Well, that's just, that's
so that the market can get you where you need to be. Like, figure out what your number is, of course, but don't come to market with that, because you're going to be disappointed if the market doesn't agree with you.
So I think that's the distress thing people are talking about, like just how much equity is a seller willing to lose. I don't think but it's not so much. There's not this humongous discrepancy. I think in the most cases, what I've learned is not so much discrepancy that like, the bank's in a loss position. I feel like it's mostly like the seller is just going to lose a little bit of their equity or a little bit of their upside they thought they had.
Yeah. Agreed.
Which,
unless you're strategic.
Yeah.
But if you're not strategic, then you stand to lose a little bit. But weighing the odds, is it better to lose a little bit and obtain freedom and, get out of something that could potentially be an albatross around your neck? Just let it go.
Yeah.
And I think that's a hard pill for people to swallow, because their main thought getting into it is, I'm going to come up on all of this money.
Well, I mean, I'm of the opinion, depending on the deal and the market and all that stuff, I'm of the opinion, and a lot of this was echoed at the conference too. Like, if you can keep holding, we're really in a position where it's like right now it's just a matter of time, which I know kind of like goes with this extend and pretend concept that people talked about for so long, but I really do think it, like, there's way less new supply. Like one of the markets we're in North Carolina, there's like 80% less construction this year than there was last year. Like, that's really significant. The demand has not slowed down. There's just a lot of supply. So like, rents got crushed. But if there's 80% less supply or less new construction this year than there was last year, and demand continues, it's like, okay, what does that math tell you? Can you get 2 more years, 2 more rent cycles? Because you probably be where you need to be.
Yeah, exactly.
So do you exit now and take the not deal you want to?
Exactly.
It's tough, but it is tough though. Like, to your point, it's tough. How do you make that choice? It's like, it's not an easy decision to make.
This is a long game, and you can't panic and make knee-jerk decisions based on what's happening now. You have to step outside of it and anticipate, look at the permutations and anticipate what could possibly happen. We deal with shelter.
Yeah.
People are always going to need a place to live, eat,
buy groceries,
run their shop.
Yeah.
And while online is a factor, there are still people, you still have baby boomers who are never going to transition to 100% online. They still want to be able to physically go and do what they can, if they can. It's probably part of their stay young, stay active routine.
Right.
Then you have what's after that? Gen X's?
I'm terrible at
the people,
the
baby boomers kids. The baby boomers
people.
Kids, it's a hybrid, online and then physically, because more often than not, they've got kids and they want, they need places to go to either get away from their kids or to take their kids.
Yeah.
So I don't think, online is an answer, but it's not the end all be all. So I think that bodes well for our industry. And then it just is a matter of time. And life isn't going to pivot so quickly that all of a sudden we're going to go one extreme versus the other.
I agree.
So I think people have time to hold and wait and see, and then make strategic decisions based on that in terms of timing. And if they're able to hold, I think they'll fare well
You're in a good
in the
spot.
most immediate future.
Yeah.
Yeah.
Yeah. It's definitely one of those sort of time fixes all
Yeah.
situations. And part of the reason some people got into the problem they're in, I think, outside all these external factors
Sure.
and, the market, but like, I feel like real estate very recently kind of evolved. We're in this really low interest rate period, evolved from a predominantly long game strategy of an investment to
Yeah.
people who just wanted to play this like arbitrage game where they're like in and out as fast as possible and ride this like ridiculous low interest rate, high rent growth, game.
Yeah.
And that's who really sort of gets caught up the most, I think, in the situations.
I think that's good. That's a good observation. Because I think most people look at real estate as a long game strategy. And if they're not well versed in the stock market, they are a bit more apt because there's a tangible physical asset. But that's a great point in terms of people who know the game and figured, how can I get in, tap in, get as much as I can get, and then get out and diversify my portfolio, maybe pivot to something different within real estate, or if maybe now take it to the markets because I have capital now. But like, it'll be interesting to see how things evolve in the next couple of weeks as we get more intel as to who, what, where, when, why, and how. And how we as America factor into all of this. We knock on wood, we've never been in a circumstance where we've been actively involved in war and it has touched our shores, with the exception of 9/11, but that was like the precursor to going full throttle. So provided that it continues to stay across the sea, we should be okay. Barring anything that happens directly to here. And we'll wait and see, but in the meantime, you still gotta you can't just...
Business keeps going. We still gotta live.
Yeah. But for the most part, I think people are unfazed.
Too. Yeah, I think so too.
That's, we're very much a convenience and consumer culture. And as long as I need it and I can get it, I'm okay. Until that changes, I think we're kind of still business as usual, and the brokers of the world become the parents of what's happening.
Yep.
So that this way we know how to bring it to market, so to speak, and how we respond to the greater population.
Yep.
So
we're going to basically see in a couple weeks.
Yeah.
Right? I mean, seriously, a lot. We're going to learn a lot in the next couple weeks.
I think so. Where are some good sources? What news sources do you stay tuned to that are hybrid, that focus on maybe commercial real estate and then also incorporate the happenings of the world?
I think just general business journals are always good.
Yes.
Like for us, Philadelphia Business Journal.
Yep.
Wall Street Journal.
Yes.
Is always good.
Yeah.
Just
I like the two
it's
tapped into.
The Economist is another kind of go on.
Yeah. Mm-hmm.
I'm a big headline guy though, so I like to read the headlines.
Yeah. Because I think time permits that, and it's like, give me the top line information that I need, and then...
I found CRE News really good.
Oh, I think I subscribe to that. But if not, I'll put that on.
It's like 4 or 5 headlines, and they do a really good job of like just summarizing it really quick.
Okay.
Yeah. They don't really write their articles, you just like kind of pull them from other sites. But I found that it's like just quick, good, sort of...
Yeah, if you need to get a snapshot.
Quasi-relative, yeah.
Sure.
Yeah.
Okay, that's good. You saw the ones that I subscribe to. I'm not sure if it's CRE News or CRE Daily. but it's something CRE. I'll have to check.
I might have just said CRE News, but I think it's CRE Daily.
Okay.
Yeah.
There's like a little monster.
Yeah, CRE Daily. That's it. Yeah.
Big up to CRE.
That's a good one. I like that one.
Yeah.
They usually summarize like where the indexes and rates and stuff are.
Exactly. Yeah. In a email the body of the email, you can scroll in, get a good.
Yeah.
Whereas like I like CoStar too, like when I log in, but usually I'm going in for a specific, purpose. I'm looking for some information. So I'll kind of skim the headlines there. And if it's something outside of what I've seen on Philadelphia Business Journal or New York Times, or CRE Daily, then I'll tap in. They have a wider set of categories, so to speak, hospitality and, office and industrial.
Sure.
So if you're looking for something specific, I think CoStar could be good, but not everybody has
access to that.
CoStar. So.
Yeah. But yeah, I think like now reading more than ever, like we've always looked at indexes and where benchmark rates are and newsletter or news article headlines like pretty much daily because it's super important for us and the business we're in. But I think now more than ever, like it's really important for everybody to kind of, if you touch the space, to kind of focus in on kind of what's happening because there's just so much.
Yeah.
Go.
As a seasoned broker and now owner, landlord, given our audience, what recommendation would you give for brokers who are looking to break out or maybe see an incremental increase on their year-over-year business? What advice would you give them in this next Q3, Q4?
I think now is a great time to have conversations with people.
Okay.
When COVID hit, everybody sort of in our business everybody's freaking out.
Of course.
But like our business especially freaking out because there's a stop on real estate transactions. And
stop on physical space gathering.
Yeah, exactly. Can't go into physical real estate, period.
Yeah.
Right? There's stop on real estate. But the best thing we did as a company was use that time to go have conversations with people.
Sure.
And just talk with people. Like, talk to them about what we're seeing, help them hear what other people were talking to. And I feel like when you are working this space, you're always interested in learning more about the space. Yeah. Unless you're like an accidental owner that doesn't want to be an owner.
Yeah.
But most people we deal with and most people who are listening and our base are people who want to be here and grow here.
Yeah.
So I would say if you're a broker or an investor or landlord just getting started or using this time to like grow and go to that next level.
Yeah.
These next couple weeks, months, the next quarter, a great time to just have conversations.
Okay.
Like learn every day what's happening.
Yes.
And then go talk to everybody about that. And
leverage that learning.
And then take those pieces and go talk to somebody else.
Yeah.
Take those pieces and go talk to somebody else. And just have conversations.
That's good.
Like don't sell, don't try to do deals, just like talk.
Yeah, because when it comes down to it, you'll be more experienced and you would have cultivated relationships that people now are a little bit more familiar with who you are. And you can say, hey, harken back to this conversation. Now, here we are, this moment. Could we possibly talk about these opportunities that are available? Or
Exactly.
Okay.
Exactly.